Hi everyone, welcome to the US individual taxation classes of Enroll Agent Part 1. This video is about income and assets, which is your chapter 2, and in this particular video we'll be discussing in detail about real property and personal property. Second topic, we'll be covering categories of gain and losses, and the third category we'll be covering is the netting off process in detail in this particular video. So let's dive into for more detail to cover all the three main topic of this part. Hi everyone, welcome to the US taxation class. So today we'll be starting the second half of the second chapter, which is assets and real assets, which include real property and personal property, right? I know we have touch base this concept at very high level in very first class, right? We discuss about like type of properties. So that is, like in terms of type of property is very much same what we have studied in very first class, where we discuss about like respective terms, definition, and topics which you can expect in the US taxation program, right? So if you see, type of property is same like real property and personal property, and I hope you remember what is real property, which is being like immovable property, like land or something constructed on land, right? Land and building, or maybe like plantation, or maybe any water treatment plant, or maybe any such thing which is being permanently kind of fixed with the land, or more of like immovable property will comes under the definition of real property, right? If you see left hand side, immovable property including land or anything which is permanently attached to the land, or growing over the land, or permanent attached to the land, like a land and building, growing tree, fixture, electrical permanent attachments to the land. So all those things comes in the real property. But most of the time, like in the exams or in the practical world, we have seen like, like land building or some growing trees are commonly being very much used as a real property. Whereas personal property is all property other than real property, if I summarize very short. But in terms of like example, like your laptop, your computer, your car, your machineries, your furniture, your fixture, your equipments, all those things comes under the personal property category. Here, like personal property does not mean like your personal property. Personal property means those property which is not real property, right? Which is not fixed to the land, right? So now, if you convert, if you look at like left hand side, the third box, if you convert from real property to personal property, for example, like you have trees on the land, right? So till the time they are like growing on the land, they are real property. But the time you cut the tree and make a hut, or maybe like make some painting or make some pieces of wood, so then it converted into a personal property, like wood pieces, or maybe art, craft, design, right? Any such painting on the woods, right? Or maybe like furniture from the wood, right? That all comes under the personal property. That is called conversion from real property to personal property, right? That's possible. Yes, no?
Yes, sir.
Right? So I'm just slightly increasing the size so that it's more comfortably visible to everyone. So this is called severance, that is growing tree cut into firewood, or maybe made like furniture, or extraction of sand, right? Or digging of sand out of, like the riverbed, and loading into the truck. So when you are digging the sand from the riverbed and loading it into the truck, then it is personal property, right? If you see right hand side, personal property is all property other than real property. But when you can convert the personal property into real property, for example, like bricks, you make a wall or you make a structure on the land. from the brick, sand, and all those mixture required, like cements and everything, right? So then this personal property, which is like brick, cement pouch, cement bags, sands, right, which you have bring through the trucks, right? They all are being individually is a personal property, but when you construct a building, it become a real property, right? Same is the case of wood also. Like the cut piece of the wood is being a personal property, but when you make a structure and attach to the land, right? Maybe for example, hut, and if you see in US, like most of the houses are wooden houses, right? Or if you see like in Japan also, most of the houses are wooden houses, right? So those houses are being considered as a real property. Make sense? And that is called attachment. So for example, bricks are mirrored into a wall or centrally AC installed in the house or building during the construction. So till the time it is a centralized AC, it's a separate unit, it is a personal property, but the time it is being permanently fixed and installed in the building, then it become a real property. So that's how like conversion from real property to personal property is possible, and personal property to real property is also possible. Any doubt here? Divya, Garima, Mayank. So far, so good?
No, sir. Yes, sir.
Okay. So what is personal property?
Movable properties, conversion property, real property.
Mm-hmm.
These are like the assets we study in the like fixed assets and
Mm-hmm.
just had a doubt. So like the real property we consider as a fixed asset. So like we
Say that
can
again.
like from it's my point of learning that from real property we can consider that it's also can be considered as the fixed assets like we study in simple words.
Mm-hmm.
Just wanted to ask that.
No, fixed assets covered both real property and personal property.
Okay. Oh yes, sir. Nice.
Right? Land and building is also fixed assets. Your car is also fixed assets. Your computer is also fixed assets. Right? So what is personal property?
Which is movable, like we can take it from one place to another.
Mm-hmm. Yeah. Anyone would like to add any example or something? Mayank, Rajat.
So like the
So
bricks.
example, like any,
Sir,
Yeah,
any
go ahead.
automobile.
Mm-hmm. And what is real property, Garima?
so real property, normally the immovable properties, like
Mm-hmm.
the assets, mainly land, building,
Mm-hmm.
trees.
Mm-hmm.
Construction.
Can we convert real property to personal property?
Yes.
Can we convert personal property to real property?
Yes.
What is the example?
So if we talking about real, if we cut the trees and make something out of it, right? It converts into movable.
Mm-hmm. No, converting from personal property to real property. Any example? Converting from personal property to real property.
So from personal to real, we have the example of the central air conditioning. Like we have a central air conditioning unit, and which is separate. But when we put it in the building, it becomes part of the building, which is the movable property. So that's the conversion of the person to real property.
Very good. Okay, let's do a quick question. Which of the following statement is the best definition of real property? Real property is only land. Real property is all tangible property, including land. Real property is land and intangible property in realized form. Real property is land and everything permanently attached to it. Which one is the best definition for real property?
Fourth.
Why?
because it is immovable, right? So everything that which includes all the properties like the trees and the land and everything which is constructed fully,
So the
everything
other
is included in real property.
So, do you remember one example of mold we have discussed in few class back? Do you guys remember that example? Like a tire manufacturing company is setting up like molds in their plant. Have we discussed that example with you?
I'm sure.
Shubham, do you remember any such example? Huh?
I think so. We didn't discuss that example.
We have not discussed.
I think so.
Okay, might be in some other class I was discussing. Let's assume you are a tire manufacturing company. Let's assume you are a MRF or Bridgestone type of company, right? You know how they make tires? They make the tires through the molds. Or maybe I can show you really quick. Mold machine. Yeah. So let me show you something which you can easily understand. Hmm. Yep. Can you see
Mold is
this?
something which will take the shape of that particular mold.
Oh, yes, absolutely true.
Tire, it'll take the shape of a tire. If we talk
Yes.
about something else, probably if we talk about the sand or mud bowls, mold also, like we drink tea mold. What is that called?
Sancha
Uh,
in Hindi.
Yeah, absolutely right. You know, like, yeah. So I think this image will show you what exactly I'm. For example, this is a molding machine for making tires. Can you see this right hand side? This big machine.
yes.
So this machine is basically a mold in which like tires are being made from the raw material, which is like rubber, steel wires, copper wire, and everything when it put into this, right? So this machine, for example, you are a tire manufacturing company, and for to fix this machine, you need to make a platform, right? It's required a platform to be built in which how much machine you are seeing on the top side equivalent to the size go inside the platform also in such kind of machinery, so that they can take the balancing and like hold the weight of that such big machinery and molds, right? So for example, if your client is building that platform, so would that platform be a real property or a personal property?
Personal,
Why?
because we can remove it and take it anywhere, anytime we want. It can be moved from one place to another.
What was the question I asked?
So, sir, it's real property. It becomes the part of the like.
No, Rajat, what was the question I asked?
So is that machinery
No,
real or personal?
no, you have not heard the question then.
The platform.
Shubham, what was the question I
Sir, you
asked?
talked about the foundation, like the on
Yes,
which
platform.
yes, sir.
Yes.
Foundation is the is like for the lifetime.
So I said whether the platform which company has created is a real property or a personal property. What will be your answer, Rajat?
Base. You're talking about the base
Hmm.
on which the
This
machinery
machinery
has
has
been
been
installed.
installed, yes.
the real properties then.
Hmm?
And then it will be a real property, so
Yeah.
because the base cannot be moved, I guess. So.
Hmm.
So the base cannot be moved. The machine can. So base would be a real property.
Hmm.
And the machine would be a personal property, I guess.
Yes.
Hmm. Right? Makes sense? Everyone?
Yes, 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 yes.
Hmm. Like sometime in books, when we theoretically read, it looks very theoretical, very easy. Yeah, there's a land and there will be building, then it will be. But when you see the real-time experiences, for example, if you are auditing such company, or if you are doing taxes for such company, how you need to treat the respective fixed assets. That's important, right? So I think this is first concept we are done. Second thing which we need to learn today is category of gain and loss on asset and netting of process. So gain or loss, it can be a capital gain or loss, or it can be a ordinary gain or loss, depending on category of asset that we will be discussing in detail. So gain or loss arising from sale or exchange of capital asset for the business will go into the capital gain, and gain and loss arising from the normal operation of the business will go into the ordinary gain or loss. So we'll be discussing what need to be go into the capital gain and what should be considered in the ordinary business gain and loss. Capital gain, just for your information purpose, capital gains are generally being taxed at a lower rate than the ordinary gain and loss, right? Business income or ordinary gain and loss are being taxed at the same rate, whereas capital gain are generally taxed at a lower rate. So hence company more try to fit into like capital gain category, whereas like tax authority would look for whether the right classification has been done by the taxpayer or not, right? So this is an area where like sometime company may get challenged from the tax authorities. So what are the capital asset? Before understanding what is capital gain or capital loss, or maybe like ordinary gain or ordinary loss, first we need to understand what is a capital asset. All the property, all property except your inventory, your depreciable property or real property used in a trade or business, right? Account receivable, not receivable, copyright, literature, artistic, musical composition, all those things. Fourth point which I'm saying specifically in the hand of the creator or anyone who assume the creator basis received through the gift, then only it is being not a capital asset. But if you have purchased, for example, I have written a book and I have done like copywriting on that, and now you have purchased that copyright from me to sell that book. For example, let's assume you are Tata McGraw, right? Tata McGraw, what they do, they take the copyright from the authors and then they print the book and give the royalty to the author on each sales they make. Same way, if you see like the Netflix, I'm sure all of you might be watching, right? So what Netflix do, they take copyright from the production houses for the respective movies and series to show on their OTT platform, right? But they are not the creator. In the hand of Netflix or in the hand of Tata McGraw, the copyright which they have received or literature which they have received can be the property for them. But I am an author, I have written the book, I have like obtained the copyright. In my hand, it is not a capital asset, right? That's the difference. And you will see a lot of question on this also. If anyone purchase this item, it will be a capital asset in the hand of purchaser. Next is US government publication received from the government other than by purchase at a price that is offered to the sales of public at large. Certain commodity derivative instrument held by the commodity derivative dealers, hedging transaction, ordinary supply used in a trade or business. These all things are not considered as a capital asset. right? So generally, like your fixed assets, like Mayank, which we were discussing earlier, are those assets like generally considered as capital asset. But you know, your inventory, your account receivable, your notes receivable, or your government bonds, or you can see derivatives, hedging transaction, normal routine supply for the businesses would not be considered as capital property, capital assets. Make sense? Mayank, Rajat,
Yes, sir.
Shubham, right? So now let's one more example over here. That is something new you need to understand. Real property which is being subdivided for the sale. For example, you have a piece of land. Let's say you have 1000 square yard piece of land. And that square yard piece of land, if you sell as it is, then it is a capital asset. But you are a real estater, right? And you cut that into the different small pieces, and you're selling now piece of land, right? In that case of scenario, it is not a capital asset, it is converted to the business asset, right? And now you are into the real estate business and selling the plots. So that should be your business income, not the capital gain. Whereas there are two exceptions to it. First exception is if you are selling all the plots to one party, then you can consider that as a capital asset. For example, let's say you have 1 acre land, right? 1 acre piece of land. On that, you have done the cutting of plot size. Let's assume you cut 100 plot on the 1 acre land, and the entire 1 acre land you have sold to another person as it is after doing the cutting on maps, right? In that case of scenario, it can still be considered as a capital asset. But if you cut the pieces of land into 100 plots and now you're selling to the 100 individual, then this is your business income. Now you are doing real estate business. So it should be considered as a ordinary business income, not the capital gain. Make sense? So far, so good?
Yes.
Another thing is capital
Yes, sir.
gain. Capital gain up to the sale of 5 plots in a year can be considered. So that piece of land, if you have cut into the 5 pieces and you have sold those 5 pieces, till that extent it is capital asset. But the time you sold the 6th plot, let's assume you cut the piece of land in the 6 pieces, 6 plots, and now 6th lot you are selling, the 5% of the revenue from all the lots sold in a year would be treated as ordinary income. And beyond that, if you sell, it will be considered as ordinary income. Make sense? Two exceptions. One is if you are selling the entire pieces to one buyer, then you can consider as a capital gain. Or if you are selling 5 or less than 5 pieces, then also you can consider that as a capital asset. But if you are selling more than 5 pieces, 6 pieces, then 5% of the entire revenue would be considered as ordinary income. And if you are selling more than 6 pieces, then it will be considered as normal business income, real estate business income, and need to be taxed in the ordinary tax rate. So individual and S corporation subdividing the real estate for a sale may qualify for capital gain treatment if the following conditions apply. Therefore, as for C corporation, there is no separate treatment of capital gain. For C corporation, it is always considered as a business income, but for individual or S corporation, if you meet all the 3 conditions, then still you can consider that as a capital asset, but for the 2 cases. First, when you are selling all the pieces to the single buyer, or when you are maximum selling 5 pieces in a year. First one is subdivider must not be the real estate dealer. That means if you are subdividing that piece of land, you are cutting that piece of land, but it's not your routine business, you are not a real estate dealer, right? Then it is okay. And not substantially improvement may be made on the lots which you have sold. For example, if you have piece of 1 acre land at the mountains, right? And now if you sell that piece as it is, then it will be a capital gain. But if you cut the mountain, do the finishing, make it a usable land, right? And then you are cutting into the pieces and selling the pieces, then you are into the real estate business. Then it is not a capital asset, right? Third is lots sold must be held at least 5 years. That means this is long term. But if you have inherited from someone, for example, from your father, your grandfather, your mother, your grandmother, your in-laws, from anywhere, if you have inherited, in that case of scenario, total holding period of the land should be more than 5 years. That means from whom you have inherited his or her holding period and your holding period clubbed together should be more than 5 years. Make sense? Any doubt, guys?
No.
Mayank, Rajat, Vivek?
No doubt, sir.
Okay. So let's do a practice question here. Rose has the following transaction during 2021. Sale of ABC stock basis was $400 and sold at $800. Commission paid on sale of stock $50. Received 200 extra share of DEF in stock split at fair market value of $800. Decrease in the value of GHI mutual fund $600. JKL stock declared worthless basis $700. Now its value 0. What is the net gain or loss Rose will claim in Schedule D? What is Schedule D? Capital gain or loss, right?
Yes, sir.
Have you guys seen all these forms? I think I've shared with you. Schedule D. Have you guys gone through this form by any chance? Divya, Mayank, Vivek? You guys have this form, right? Yes, no?
Yes, sir. Look at the form Schedule C, Schedule D, Schedule E.
Say that again.
Yes, sir. We saw the form Schedule C.
So you have seen, right? Everyone? Mayank, Vivek, Sachin?
Yes.
You have this form, but did you get a chance to look at it
Yes,
or not?
that's what I was saying, sir. I haven't looked at this one.
Oh, okay. So then after this class, please look at all the form. Like I've already shared all the schedules with you, right?
Yes,
So in
sir.
this schedule, they are saying how much they need to report as a net gain or loss. So let's do the math. First one is sale of ABC stock. So they have sold the stock for $800, which was purchased at $400. So gain was how much? 400? Yes, no?
Yes, sir.
And commission they have paid is $50. So minus 50 is 350, right?
Yes.
So first two statement is resulting into $350 gain. Second is receive 200 extra share of DEF in stock split. So what is stock split? Any idea you have?
I think we will not consider stock split.
That's a topic we're discussing today. But I'll just give you a high level overview. Stock splits mean you have, let's say, one stock of $100 each. Now the company is going into the stock split, and they said instead of $100 one share, you can take $10 10 share each. So ultimate value will remain same, but number of shares will go change. That is called stock split, right? So they are saying receive 200 extra share of DEF in stock split, market value 800. So it means no change, right? Because stock split does not impact the value. Make sense? We'll be discussing this topic in detail today. Next is decrease in the value of GHI mutual fund. So the value of the mutual fund has decreased, but you have not sold yet. Will you consider that in calculation of gain or loss?
No, sir.
Yes or no? Just give your best guess. Don't worry.
No, sir, because maybe the value can increase in the future. So we're not gonna consider it.
Yeah.
So
Yeah. So the mutual fund generally we purchase for the long term. If there is temporary change in the value, that will not impact the financial statement, right? Last one is JKL stock declared worthless. That means $700 basis stock you have purchased, now it has zero value. Would it result into a capital gain or loss or ordinary gain or loss?
So, sorry to interrupt, sir. Could you please repeat that again?
Say that again.
So I'm not, sir. I was having an internet issue. Could you please repeat that question, sir?
I just said this one.
Yes, sir.
JKL stock is declared worthless. So you have purchased stock of JKL for $700, but today they have considered it to be worthless, zero value. So would it be your business or ordinary gain or loss, or would it be your capital gain or loss?
Sir, capital, I guess.
Capital gain or losses arise generally on the sale of capital assets or property, right? So this will be, as of now, either considered as ordinary gain or loss. We'll be discussing section 1231 and 1246 and 1250, 1245 and 1250. There will be covering this one topic, but just for this question, I'm just helping you out. The capital gain or loss arise on the sale of the assets, right? Here we are not selling anything. So the stock you have purchased for any company is now become a worthless. So it's being considered as the ordinary gain and loss. So hence, if you see the total value which will come into the schedule D will be only from these two statements. How much is that? How much we have calculated?
350 gain.
350, sir.
$350, right? 800 minus 400 minus $50,
Okay.
right? Rajat, Vivek.
Yes, sir.
Okay,
Yes, sir.
cool. So if you see, first we have covered type of property, right? Then we have covered categories of gain and loss, and netting process we'll be discussing, right? Now we are jumping into the third topic. This is, like new topic for you. This topic you are probably not exposed to in Indian taxation. So this is new topic. Please listen it very carefully. And it is again heavily tested in exam. So it's very important topic. So gain or loss from section 1231 asset. So what is section 1231 asset? First, section 1231 assets are those assets which are real or depreciable business property including any involuntary conversion, which is being used for the trade or business and has been held by the taxpayer for more than a year. Before jumping into 1231, 1245, 1250, 291, all this section, let's first understand what this section is all about. So let's jump into this page really quick first, and then we go back so that you will be in a position to correlate the respective boxes to the respective section. So section 1231 says the property is real or depreciable business property held for more than 1 year by the taxpayer is called section 1231 property. What is section 1231 property? What is section 1231 property? The property held by the individual taxpayer for more than a year that either may be a real property or may be a depreciable property, if I simplify. So if you are a business person and you are holding any real property or depreciable property for a period of more than 1 year, then that property comes under section 1231. So this is easy to remember. 1231 means December 31st, right? 1231, right? Easy to remember? Huh?
Yes.
Easy to remember. 1231, that's your year-end date, right? So section 1231, gain from sale of property is taxed at a lower capital gain tax rate versus the tax rate of the ordinary income. If the sold property was held for less than 1 year, then section 1231 gain does not occur. So what is section 1231 gain? That means you are taxing at a lower rate if the asset fall under this category, right? You are taxing at a capital gain tax rate, not the ordinary gain tax rate. So which property is section 1231 property?
Which is held for more than 1 year.
Business property, depreciable business property or real property, whether it's a real property or business depreciable property, but using for the business purpose, right? If it is your land and building, office land and building, then also it comes under 1231. If it is your car, which is you are using for a business purpose, then also it come in 1231. Mayank, Rajat, Vivek, make sense?
Yes.
Rajat, Vivek,
Yes, sir.
right? Garima, any doubt?
No, sir.
Second section is 1245, 1245, right? So like how do I recall this section? On December 31st, I am waking up till 12:45 and I've started studying and reach at 12:50. So that's how I recall this section in my exam days on 12:31, 12:45, 12:50. Right, 12:45 deal with the tangible and intangible property that are going to be depreciable and get amortized. So that means you have purchased certain property for a business purpose on which you are going to charge the depreciation or on which you are going to amortize for the period of time. But as of now, you have not started yet. 12:31, the property which you are already depreciating. 12:45, the property you have built or purchased, but depreciation or amortization has not yet started. Make sense?
Yes, sir.
Third is 12:50. 12:50 address the taxing on gain from sale of depreciable real property such as commercial building, warehouse, bonds, rental property, and other structural component at an ordinary tax rate. So section 1250 says when those property which are being depreciable real property is being taxed as the ordinary tax rate. However, tangible and intangible personal property and land do not fall under this tax regulation, right? So this only and only for the real property. So here you can do underlining also. Only and only depreciable real property. Depreciable real property means your land and building, right? Or your farm, or maybe like oil rigs, right? But it does not cover any personal property. Personal property do not fall under the tax regulation of 1250, right? So three sections which we have studied. First one is 1231. What is 1231 is?
The
What is
real or
12?
depreciable property held for more than 1 year.
Yeah, Garima, you're saying something?
No, I said. I was saying.
Sorry, your voice is not clear. Yeah, Mayank, Rajat, Vivek. What is 1231?
So real or depreciable business property, and we can remember this 1231 from last year, the 31st December 12. Yes. So, and it's the first line says all the real or depreciable business property held for more than a year. I remember this.
And what is 1245?
Property that are going to be depreciable, sir, or amortized.
Yes, going to be.
Yes, sir, going
That
to.
is the important word, right?
Yes.
And these are
Real
real
or
as depreciable business property, right? And what is 1250? What is
sale of depreciable real property, sir.
hmm?
Like getting gains from the sale of depreciable property. We just give example: commercial building, warehouse, bonds, and ordinance at an ordinary tax rates.
Yeah, Rajat,
Yes, sir.
Vivek. What is 1250?
So the gains that uh, we get from the sale of the real property.
Which real property?
Like for example, if we have some factory or some building, and if we sell in gain, so those are considered as real properties.
No, like for example, you are in a business of constructing a building. So then if you have constructed, let's say, a warehouse and you are selling that warehouse, would that be comes under 1250?
Yes.
No. If you are a real estater and you are constructing a warehouse, you are constructing a building, or you are constructing any mall for the sale, would that be come under 1250 category? First, would that be a capital asset? If you are a builder or if you are a real estater and you are making a commercial building for sale, would that be a capital asset? Huh? Rajat, Vivek, Sachin?
No, sir.
Huh? What's up, Rajat, Vivek, Sachin, Mayank? No response. Have you not understood or you don't like
I'm
responding?
confused between if into that business, or is it like I have gained from my ancestral or something like that.
No, are
This
two
is
different things.
not
Like my
if
question is very much clear. You are a real estate builder and you are constructing a warehouse for the sale. So would that warehouse be considered to be taxed under 1250 or not?
So depreciable real property. So I guess not, sir.
Yep. What about you, Rajat, Vivek, Sachin?
No, it will not come in that
What is the reason?
because it is his profession.
Yeah, it is the inventory for him,
Mhm.
right? It's not building for him, it's an inventory for him. That's his or her normal routine business of building warehouses, constructing the building and selling it, right? So hence it does not comes under 1250. But you are a company, you have built a warehouse for storing your product and you can say equipments, right? In that case of scenario, on that warehouse, you're claiming depreciation, right? So it's a real property which is depreciate. How you need to tax that can be considered as per 1250. Make sense, Rajat?
Yes, got it now.
Okay, so next is section 291. Section 291 contains additional depreciation recapture rule applicable solely to the corporation which dispose of depreciable real assets. This recapture is in addition to the any recapture first calculated under section 250. So let's assume section 291 is for the additional depreciation, just for the simplicity. Normally, for example, if you have purchased one asset for, let's assume, $100,000, right? So let's assume the life of that asset is 10 years. For example, we have purchased a JCB machine for $100,000 and the JCB machine life is assumed to be 10 years and you are depreciating over the period of 10 years equally. That means every year you are depreciating $10,000, right? Now, additional depreciation is being provided by the tax authority. Tax authorities say if you make an additional investment to purchase one more JCB machine, I'll give you 20% additional depreciation, right? So instead of $100,000, you can claim $120,000 depreciation. Why the tax law are being framed in such a manner? Because they wants to promote certain industry. Make sense? For example, let's assume you are a tax maker, right? You're a finance minister of United States of America. And in United States of America, if you see, this is a place, let's assume Arizona. Have you guys heard about Arizona?
Yes, sir.
Right? What Arizona is, it's all, like canyons and desert, right? No much in infrastructure, not much, you can say, industry, right? Now, the Arizona states wants to bring industry into their state, right? So for that, Arizona state government has pronounced to provide 50% additional depreciation. If you put any, you can say, any new manufacturing setup in the Arizona state, right? If, for example, if let's assume Mayank and Vivek has planned to set up a new plant in Arizona state and wants to make an investment of, let's say, $200,000, right? So the government says $200,000 you'll get the depreciation, but will give you additional 50% depreciation that you can claim to reduce your tax liability for the state taxes. So for state tax purpose, you can consider $300,000 as a property value, or maybe whatever is the depreciation on $200,000 multiplied by 150% that you can claim. Right, that comes under section 291. Section 291 is additional depreciation rules. Make sense?
Yes, sir.
So we understood what is 1231, we understood what is 1245, we understood what is 1250, and we also understood what is 291. That's an additional depreciation, right? Now let's come back to this chart. what this chart says, gain or loss from section 1231 assets. What is 1231 assets? What is 1231 assets? We just
Real property held for
more than
yeah, real or depreciable business property, right? Both held for business purpose, use of business purpose for more than 1 year. Now let's assume you are, let's say, what you would love to manufacture? Any specific thing you like to manufacture? We'll pick up the example from there. Huh? No, only service industry you believe in? Okay. So
Whiskey.
sorry, whiskey.
Yes.
Okay, so let's assume you want to manufacture the whiskey, right? For that, you have set up a plant, let's say in Las Vegas, right? Las Vegas, you have set up a plant and you have started manufacturing whiskey. And on that plant, you have like one bottling department, one you can say aging department, or one raw material department, one quality department, right? So let's assume you have 10 departments, like your raw material department, your quality department, your manufacturing department, your mixing department, your aging department, your bottling department. Let's assume all these departments you have, right? And now you are planning to extend your capacity for the aging, because how you want to grow your business, you need things for the aging, right? So now you want to expand your aging department and you want to build a new structural building, as well as put certain equipment for the aging of the whiskey, right? And you invested, let's assume $1 million for that. So this is you have built recently, but this is your real property, and in that you have some depreciable assets also, right? Let's assume like equipment you have made. So in the $1 million of investment you have made, let's assume $500,000 you have invested for the infrastructure, and $500,000 you have invested for the equipments. So now you're planning to sell those for some reason, right? For example, if you are not going to with the same plan which you have earlier thought of, or maybe like you wanted to wind it up, your business regulatory environment is so stringent, and you decided to sell this additional piece of infrastructure which you have developed for the additional aging department. So now either you may have gain or you may have loss, right? That is the probability. Either you will gain or you may be end up incurring loss, right? Yes, no?
yes.
So if there is a gain, let's look at left hand side. If there is a gain, we need to understand what gain is on personal property and what gain is on real property. So both are separate. What is real property in our example? What is real property in our example?
Removable property. Yes.
Infrastructure which we have developed.
Yes, sir.
Right? New building which we have constructed, new infrastructure which we have developed. How much was that? $500,000. And what is personal property? Which is machineries or equipment. Yes? Are you guys with me?
Yes.
Yes, sir.
So if you look at first box in the left hand side, if the personal property like machineries and equipment under section 1245, then determine the character of gain. Character of gain will be ordinary income and to be taxed at the ordinary tax rate. To what extent? to the extent of accumulated depreciation. For example, in January 2022, you have installed all the machineries of $500,000, right? Now, let's assume February 2023, you're planning to sell those machineries. That $500,000 machinery you'll be selling, let's assume, at $400,000. So during 1 year, you might have charged, let's assume, a depreciation. Oh, me do math here. Let's draw an example here. Let's assume you have invested on machine. How much? $500,000, right? And you have hold it for 1 year, 3 months, and you have depreciated at the rate of, let's say, 10%. And after 1 year, 3 months, you are selling at, let's assume, 400,000. Right? In that case of scenario, what it says, ordinary income to the extent of 100% of accumulated depreciation. So what will be your depreciation for 1 year, 3 months at the rate of 10% on this? $60,000. Sorry, $62,500.
6,500.
Right, everyone on same page?
Yes.
Rajat,
Yes.
Mayank,
Yes.
Vivek, have you got it? How we calculated 62,500? Have you got it? How we calculated 62,500?
Yes, sir. Yes, sir.
So in this $400,000 minus 500,000. So in this case, it is coming as loss. Another example, we'll continue this. Let's assume $600,000. In that case, you have gain. How much is your gain? $? How much?
100,000.
No. What is your book value? What is your book value? 437,500. Right? This is your book value. How do you calculate book value? Your purchase price minus depreciation. Yes, no?
Yes.
Yes.
So what is the gain? Your book value and the sales price. How much is the gain? $13250. Right? Hope I'm doing math correct. Huh? Rajat, Divya, Mayank, you guys
Yes,
agree
sir.
to it?
Yes, sir.
Right? So you have a gain of 132,500. So in that gain, they are saying you need to divide into 2 parts. One is your up to your depreciation amount, which is 62,500. That will come under ordinary gain. And what is remaining? $50,000. Or how much is it? 60,000 or 70,000? $70,000, right? Sorry, my bad. The 70,000 is capital gain. Make sense? Rajat, Vivek.
Sir.
Yes, please.
Sir, the amount 132,500 is 6 lakhs minus 437,500.
Yes.
Sir, oh, okay. Sir, actually, sir, it's 162,500.
162. Sorry, my bad. So
And this-
16250, then this is 100,000. Right?
Yes.
Thanks for correcting.
Sir, Actually, your screen is not working from my side. Can I just rejoin again, sir?
Yeah, please. But everyone, can you all see my screen?
Yes, sir.
Yes, sir.
So like it's
So
paused from my side.
no worries, you just exit and join back.
Yes.
Rajat, Vivek, is this
Sir, can
example?
you please repeat the how 60 to 500 came?
60 to 500 is a depreciation
Depreciation 10%.
for 1 year, 3 months at the rate of 10%. How do you calculate depreciation,
500,000.
Rajat? How we calculate depreciation? Your value is $500,000 multiplied by 10%, multiply by how much? 15 by 12.
100 total.
15 by 12, right?
Yeah.
15 months divided by 12 months, right? How much is it? 62,500. That's how we
Okay.
calculate. This is your
Yeah.
depreciation for one year, 3 months.
Got it.
Any doubt what is ordinary income and what is capital gain in this
Yes.
example?
ये 6 lakhs कहाँ से आया? 6,000.
6 lakh is sales price.
Sales?
Sale if you are selling it.
अच्छा जो market value है आपकी. Okay.
Shall I remove it? Shall I remove this example? Or you guys need any more clarification?
Yes, sir, it's fine.
So here, if you see, to the extent you have charged depreciation, that amount will go in the ordinary gain. Why? We need to understand why also. Because you have reduced that much amount from the ordinary income and you have taken a benefit of ordinary tax rate. Right? What is depreciation? Is allowable expense, right? So in the year 1, you have charged the depreciation. So your income has gone down, which is supposed to be taxed at the normal tax rate, ordinary tax rate. Hence, to that extent, you need to pay ordinary tax rate. Over and above, you can pay the lower tax rate of capital gain. So that is the rationale. Make sense, Vivek? Vikas? Divya?
Yes, sir.
So why we are charging ordinary tax rate to the extent of accumulated depreciation? Because that much amount of benefit you have received earlier by paying less taxes, by reducing your ordinary income through the depreciation. Sounds good? Okay. So 1 second, let me remove this. Okay. So now look at left hand side. It's left hand side, I think we have covered. So the remaining gain will be treated as section 1231 gain. That is tax at lower tax rate as a capital gain tax rate. Now look at second box. If depreciable real property, that is your land or building, and the taxpayer is individual. So here is the thing which you need to keep in mind is individual. Section 1250 determine the character of gain and loss. Right? So what was section 1250? Do you remember? Or shall I go down?
Sale of depreciable assets.
Sale of
12:45 पे शुरू
depreciable.
करा project.
Sale of
शुरू करा 12:50 पे खत्म हो गया.
yeah, that's how I remember this concept. These three sections are such a correlated, or like so much interrelated. So we need to look at all the three together when we are studying. So section 1250 address the taxing of gain from sale of depreciable real property, right? And the component to the extent of, you can say, ordinary tax rate. So that personal property or you can say land do not fall under this category. It's only and only for the depreciable real property, which can be taxed at the ordinary tax rate. But when it is to be taxed at an ordinary tax rate, need to be covered here. So if
कपड़े प्रेस में गए थे?
Mayank?
Sorry, मैं मेरी मॉम ने बुला दिया था.
Okay, so if depreciable real property, which is your land or building, and the taxpayer is individual, then section 1250 determine the character of gain, whether it will be ordinary gain or it will be a capital gain. An amount equal to the lesser of the recognized gain on the sale of section 1250 asset or accumulated depreciation on the asset is taxed at the maximum tax rate of 25%. So 25% is like generally ordinary tax rate, right? Here also the same situation. The first difference between first and second is personal property and the real property. Personal property treatment is same whether you are individual or you are C corporation, S corporation, or any business. Whereas for the real property, the bifurcation is how to treat with the individual and how to treat with the businesses, C corporation or S corporation, right? But the fundamental remains same to the extent you have taken the depreciation. Till that amount, you need to pay the ordinary taxes. Over and above, you can go with the capital gain tax. Crux of the story will same, but is being bifurcated under section 1245 and 1250 for the personal property and for the real property. Make sense? Yeah, Mayank, Vivek.
Sir. So there's an amount equal to lesser of the recognized gain of sale on the section 1250 asset or accumulated depreciation on the asset taxed at maximum rate of 25%. So it's for the like section 1250 or it's the other statement it says?
Yeah, so section 1250 says how you need to tax to the gain.
Yes, sir.
Right? Gain will be bifurcated into two pieces. One is the accumulated depreciation or gain, whichever is lower. If accumulated depreciation is lower, then to the extent of accumulated depreciation only. But if accumulated depreciation is more, then to the extent of gain. So let me draw an example on Excel sheet.
Whichever is lower.
Once again, I think Excel sheet, let's do the same example on Excel sheet so that we can refer back again and forth. So if I take you down here, so let's assume what was the example we have? New plant for whiskey. So in that you have infra development, let's say $500,000, and you have an equipment of $500,000. This you have made on 1st January 22. Right now on let's assume on 3, 1, 23. Oh boy. Sorry. 3, 1, 23. You are selling this, let's assume, for $600,000, or you're selling this to, let's assume, $400,000. Right? This is what the example we were discussing earlier. And let's assume like same. Let's assume $550,000, and let's assume 350,000, or you can say 450,000. Right. So this is your sales. This is, let's say, two scenarios. Scenario one, you're selling at this, and let's say depreciation rate you have 10%, and you have, let's say, 20% is the depreciation rate. Now, what is the book value? First, we need to calculate the book value. Book value, when you need to calculate the book value, when you need to calculate the book value at the time of sale, when are you selling? 3, 1,
23. So, no.
right? 3, 1, 23. So let's assume 15 months of depreciation you need to charge, right? So this 5 lakh multiply by 10% multiply by 15 divided by 12, right? This is what we have done the math earlier.
Yes, sir.
Now here you have 20% depreciation. So now this is your book value. Sorry, this is your depreciation, right? So book value will be this minus this, and this minus this. This is your book value, right? Vivek, Divya, Rajat.
Yes, sir.
So we calculated the depreciation of 15 months, yeah?
Say that again. Yeah.
So it shouldn't be of 14 months because
Just let's do it on 15th, right?
okay.
Yeah, just to avoid any confusion. So I do not want, just for simplicity, I'm keeping it 15 months. But so let's assume this is your book value. Oh, this is your book value basically, right? Now go back here. First one example, like the gain, which is on personal property. What is your personal property? This is your personal property, machine, right? And this is your real property. So first we are calculating the gain or loss under section 1245. Under section 1245. 1245 is applicable for personal, right? So in the first scenario, what is the gain? If you have sold this personal property 550 and the book value is this, so this is your gain.
Yes, sir.
Yes, sir.
Right? And in the second scenario, if you are selling it for this and your book value is this, so then also you have gain. So let's assume in the both scenario you have gain. So let's take one more thing here. 350 or 300. So once again, have I selected right number? No, I think I have selected wrong. So this 450 minus 375. So the gain is this, right, in the second scenario. So here in this 175, you have how much amount of depreciation? How much amount of depreciation you have? 125,000,
Yes, sir.
right? And same is the case here, 125,000, right? What they are saying, ordinary income should be gain minus the accumulated depreciation. Sorry, your capital income, capital gain should be your total gain minus the depreciation. This should go your capital gain, and ordinary income should be this.
So that would be like the ordinary loss if you are calculating for the second part.
No, as of now, we are discussing gain side. So we'll come to the loss side also. That we'll discuss separately. As of now, if you see, we are looking at gain side. Left hand side, all the three boxes are gain side. We'll be discussing loss side also.
Yes.
So in the first example, you have gain of $175,000, right? And $175,000 to the extent of depreciation, that is 125,000. It will go in the ordinary gain. Remaining balance, if any, this will go into the capital gain. This will be taxed at lower tax. Right? Makes sense? So this 125,000 will be taxed at a normal business tax rate. Why? Because in the earlier period, you have taken the benefit of normal tax rate. That is the reason, to the extent of accumulated depreciation, you need to pay normal tax rate. Make sense? Mayank, Rajat?
Yes, sir.
Garima, Divya?
Yes, sir.
Now, in this scenario, you have gained 75,000, but you have depreciation 125,000. So here, the capital gain will be 0, and the entire 75,000 will be taxed as the ordinary gain. Make sense? Mayank, Vivek?
Yes, sir.
Sachin? Vikas sir?
Yes, sir. Yes, sir. Got it, sir.
So here, if you see what it says, this second box in which you are getting confused, man, an amount equal to lesser of first, the recognized gain on the sale under section 1250. Recognized gain is 75,000, right? Or accumulated depreciation. How much is the accumulated depreciation? 125,000. So it's saying lesser of these two need to be recognized as a capital ordinary gain to be taxed at a 25%. Make sense, Mank? Now it's clear.
Yes, sir. Much clear.
So in first and second boxes, the difference is only real property and personal property, but all fundamental things and calculation is absolutely same. Section 1245 and 1250 calculation is same, but 1245 is for personal property and 1250 is for the real property. Now coming to the real property for the businesses, C corporation, right? So section 291 determine the character. Section 291 also need to be considered if in the earlier year you have taken additional depreciation. Then you need to reverse the depreciation, right? Gain is equal to ordinary income to the extent of 20% of lesser of recognized gain or accumulated depreciation on the asset. So let's assume you have a C corporation, right? You're a C corporation and you got additional depreciation of, let's say, 20%.
Excuse me, sir. Please copy paste this example in the notes.
If you can just note it down on your notebook or something. Otherwise, like I need to draw something from a scratch. I'll see how to put this as an example in the notes. But you know, like for quick reference, if you can just note it down in your notebooks, so it will be quick.
Okay.
Because like if I have to make an illustration, then I need to put it down in a more sophisticated manner. So as of now, like we are just going through the flow.
Just give us a minute, sir. Okay.
Or maybe just take a screenshot. That will be quick.
Yes, sir. Okay.
Either take a screenshot once we are done with this example, or if you want to make a note, so you can just make a note in your notebook.
Yes, sir.
Which method you are following? Screenshot or note?
Screenshot.
So just wait till end and in a one way you'll take the screenshot. So let's assume accumulated additional depreciation is being allowed 20%. So 20% additional depreciation, let's say you have taken, I'm just putting it here only, multiply by, let's assume this. Like $100,000, right? So now look at this one, third box. Gain is equal to ordinary income to the extent of 20% of the lesser of recognized gain. Recognized gain, let's assume you have 175,000 recognized gain. Or accumulated depreciation. So here you have accumulated depreciation of 125 and this 100,000. So 225, right? So here let's go with this one. This plus additional depreciation. So this multiplied by 0.2, 20%. So here what it says, gain is equal to ordinary income to the extent of 20% of the lesser of recognized gain or accumulated depreciation. So this 35,000, which is lower of 20% of the gain or the accumulated depreciation, you can consider to that extent as ordinary income. So these all three phases or three category of gain. Now let's jump into the losses side. So section 1231 asset. What is 1231 asset? Real assets or depreciable business property, which is including involuntary conversion used for trade or business to be held for more than 1 year. And now the scenario is of loss. In that case of scenario, loss are to be netted with section 1231 gain. And the like if on one property you have gain, on another property you have loss, then first you can do the netting off, right? That you can do. And if the result of the net 1231 loss, then treat as a section 1231 ordinary loss. If the result of 1231 net gain, then treat as an ordinary gain to the extent uncaptured in 1231 loss in the previous 5 years. The rest will be treated as long-term capital gain. Let's do the math to understand this. Now, look at this scenario, third scenario, right? Just keep an eye on this third scenario now. So in third scenario, what is your gain oblique loss? I'm just doing math over here. So here, if you see, you have book value of this much minus your sales price this much. So say sales minus the book value. So this is your loss. In both the scenario, you have losses. So now under section 1231, you have these two assets. Both the assets you have one loss, unfortunately. Let's assume you have one more asset. Let's assume you have one more asset, which is land and building. So land and building also, let's assume you have $500,000, right? And that you have, let's say, 10% depreciation rate, right? And this land and building, here you have this, let's say this you have $100,000, $1 million, right? So this $1 million of land and building, which is gone appreciated at, let's assume, $1.1 million. $1.1 million. And here you have gain of 225,000. So now you have three assets. One is your land and building. Second is like infrastructure you have developed. Third is equipment you have placed, machinery and equipment you have placed, right? For the new whiskey plant, right? So here, the first two assets, they both are generating loss. What this is, this loss can be first netted off against the gain. The loss can be netted off against the gain. So what is the total balance? 62,500. And here, assume one more example. I'm just extending one more example over here. Let's assume this is 101. Sales minus the book value. So this is another fourth scenario. So two scenario here in case of netting of process. In the first two asset, look at this example. First, look at this example, and then we will look at this example, another example. Just look at this example. Here, the first asset you have sold for $350,000 and your book value was 437. So you got a loss of 87,500, right? On another asset you sold for 300,000 and the book value was 375. So you have a loss of 75. So here you have two losses. Now look at this. The losses are to be netted off with section 1231, right? So if you have loss on one asset, you can net off against the profit or gain from the another asset, right? So here on another asset, you have profit. And this is the net position. This is your net position for the all gain and losses. If the net position is gain, then treat as ordinary gain to the extent of uncaptured 1231 losses in the previous 5 years. So this will treat as ordinary gain if you have 1231 losses in earlier 5 years. else it will be capital gain. Make sense? Have you got it, or you need some clarification? What exactly is it? Vivek, Divya, Mayank, have you understood how this 60 to 500 we need to treat?
अगर 5 ईयर से लॉस हो रहा है तो वो ऑर्डिनरी गेन में आएगा, नहीं तो फिर कैपिटल गेन में.
Yes, absolutely true.
Okay.
Right. So first you understood netting of process. So you have 1231 gain and another asset you have 1231 losses. So you can net it off both and reach to the net number. And net number you need to understand, is it a gain or is it a loss? So in the first scenario it is 62,500 gain. Right? So you have 1231 net gain of 62,500. So how you need to make a treatment of this 62,500? If you have any losses in previous years, previous 5 years, then first you can adjust that losses, and to that extent you can consider this as ordinary gain and need to be taxed as ordinary business income. If you do not have any past losses, then you can consider this as a capital gain and to be taxed at a lower tax rate. Make sense?
Yes,
Mayank, Rajat,
Yes, sir.
Vikas sir.
Yes, sir.
Now,
तो नेटिंग में ये होगा ना, जैसे कि ये जो हमारे शॉर्ट टर्म गेन हुआ है, शॉर्ट टर्म गेन विद द शॉर्ट टर्म लॉसेस इन द लॉन्ग टर्म.
we will come to that. We'll come to that.
Okay.
That is also topic we'll be covering. But here, like I'm just focusing on 1231, which is like important topic. It's being heavily tested in exams. Second example we have like loss on first asset, second asset also loss, third asset we have gain, but overall position is loss. Overall we have 1231 net loss. Then how you need to treat? If the result is net 1231 loss, then treat that as section 1231 ordinary loss. So this you need to treat as ordinary loss, and you can reduce this amount from your ordinary income. Make sense? If you have net loss of 1231, then you can adjust and pay low tax on ordinary income. Make sense? Rajat, Divya, Garima. Looks good. Any doubts so far on concept base? I know this is new concept, none of you are exposed to it, but any doubt you are feeling or any difficulty in digesting the concept? Vivek, Mayank, Vikas?
Yes, sir. Yes, sir.
Yes, sir.
So far so good. So let's look at this entire picture really quick.
Yes, sir. Yes.
First you have 1231 asset. On 1231 asset, either you may have gain position or you may have loss position. If you have a gain position, first you need to identify gain is on personal property or on real property. If it is on personal property, you need to go with the 1241-45 rule. If it is the so real property, then you need to further understand, is it for individual or is it for the company? If it is for individual, then you need to go with the 1250. If it is for the company C corporation, then you need to go with the 291. But at the end, if you see, math is same. It's only section which are different, right? If you see, math is same. The total income you are generating, to the extent you have charged accumulated depreciation in earlier period, to that extent you can consider as ordinary gain. And beyond that, if you have gain, then that gain is a capital gain. On the other side, if you come to the losses, all the losses will be treated as 1231 losses directly and will be reduced from the ordinary income if net position is not. But if you have one side asset which is giving you 1231 gain and another side asset which is giving you 1231 losses, first you need to net off those, and then the net position you need to evaluate. If the net position is gain, then you need to look at previous 5 years if there is any loss. Can you hear me?
Yes, yes.
Right? If you have net position as a gain, then you need to look at the previous 5 years whether you have claimed any loss. If you have claimed any loss in the previous 5 years, then to that extent you will be charged as the ordinary tax rate. If there is no losses under 1231 which you have claimed in the previous year, then the gain will be taxed as a capital gain tax rate. If the net position is loss, in that case of scenario, it will be considered as ordinary loss, and that amount you can adjust from your ordinary income and you lower down your taxes. Simple? Yes, no? Got it, everyone? Huh?
Yes, sir.
Clear? Rajat? Vivek?
Yes.
Mayank?
Yes, sir.
Simple to know.
सर एक चीज बोलना चाह रहा हूँ, ये जो मेरा पिछले 5 सालों का लॉस हुआ है, आप कह रहे हैं कि वो अगर वो कोई लॉस है और मैं इनकम मेरी आती है, कैपिटल गेन आता है, तो वो मेरा ऑर्डिनरी टैक्स रेट से उस पे लगेगा.
Yes.
तो वो लेस नहीं होगा क्या? वो पिछले 5 सालों का
ordinary tax rate is 25% generally, or
Okay.
capital gain tax rate is 10 to 15%. So
तो ऑर्डिनरी टैक्स रेट तो ज्यादा हुआ ना सर. तो मैं ये चाह रहा हूँ कि जो मेरा पुराना लॉस हुआ है असेट पे, वो मेरा माइनस हो जाए जो मेरा गेन हुआ है करंट ईयर में.
नहीं. For example, very good point, Sachin ji. For example, this, let's assume you have position of 2022 and this is you have position 2023. Let's assume these are the 2 financial year and you have this position. In previous year you are having net loss position, right? 27,500. Now in this year you have generated a net profit of 62,500, net gain of 62,500, right? So in this net gain, how much you need to pay the ordinary tax rate and how much you need to pay the capital gain tax rate. So up to 27,500, which was previous year loss you have claimed, to that extent you need to pay ordinary tax rate, and after that if you have left with any amount which is this plus this, on 35,000 you need to pay capital gain tax rate.
सर इससे मुझे फायदा क्या मिला? ये तो मुझे पिछले साल भी नुकसान हुआ और उस नुकसान पे मैं ऑर्डिनरी टैक्स रेट ज्यादा भी दे रहा हूँ, तो इससे फायदा क्या मिला?
No. Previous year the loss which you have claimed, because you claimed the loss, you have paid less taxes. Understand the profit and loss account.
Okay,
For example, I'll go with very basic. Let's do a profit and loss. P&L. This is for 2022 and this is for 2023, let's assume. So you have, let's say, sales, normal sales. Let's assume $1 million. You have COGS, cost of goods sold, let's assume $750,000, right? And you have sales and admin expenses of, let's say, $50,000, and you have previous year loss under section 1231. Gain or loss under section 1231. Let's, in this year you have loss minus 27500, and in this year you have gain of 62,500. Let's assume rest of the things are same in both the years, right? So your taxable income. Taxable income is how much? Plus this minus COGS minus this plus this losses. Right, Sachin ji? Does that make sense?
Okay, sir.
So this is your taxable income. Now you have ordinary tax rate at the rate 25%, and you have capital gain tax rate at the rate of 10%. So here in previous year, in the financial year 2022, how much taxes you have paid? This multiply by 25%. Yes, sir.
Okay, sir.
And how much is being taxed you have paid on current year? So in the current year, how much tax you will be paying? First, you need to understand this 62,000 is a special category. So in this 62,000, first you need to bifurcate 27,500. On that you need to pay 25% tax, and on 35,000 you need to pay 10% taxes. So here, if you see, plus this, is equal to 62,500 plus 27,500. 27,500. Sorry, my bad. So, 1 second, is equal to this. If I do the math again here, this minus 750 minus this. I am excluding the 1231 gain. So this is excluding 1231 gain, you can say taxable income, right? In that you will be adding 27,500. This you will be multiplying by 25% plus remaining 35,000 you will be multiplying by 10%. So this much will be your tax liability. You got it? Like how I have calculated. So gain net profit other than 1231, right? 1231, first you need to bifurcate how much will go to the ordinary income. 27,500 will go to the ordinary income, and that need to be taxed at 25%. The remaining 35,000 need to be taxed at lower rate, which is 10%. So that's how you'll be calculating the tax liability for this 23. Right now, if you see in this year, you have saved taxes on 27,500 in 2022 at 25%. Yes, no. Yes or no, Vivek? Sachin?
ठीक है सर, ठीक है.
Got it?
इतना टिपिकल इन्होंने बना क्यों रखा है, मुझे समझ नहीं आ रहा है सर.
It's just a simple math. इसमें typical क्या?
जैसे इंडियन उससे अगर हम कैलकुलेट उससे कंपेयर करें तो इंडियन में तो
No, it's not difficult. It's just we do not have exposure to it. Right? Nothing is difficult. It's just we are not exposed to that environment.
नहीं सर, आप ये देखिए कि पहले पिछले साल भी हमने उस वाले अमाउंट पे 25% दिया, 27,500 पे, and next year भी उसमें 27,500 पे
last year we took benefit.
हाँ वो benefit लिया हमने उसपे.
Now we are setting off that benefit. Last year we took a benefit of that loss at higher tax rate. So now we need to pay the same tax rate. That is the basic logic.
जो आपने एक साल की कैलकुलेशन करी है, ये हमें पिछले 5 साल की देखनी पड़ेगी.
Yes. So you will be having computation of income. Right? You will be having tax returns.
ठीक है sir. Okay. Thank you.
Yeah. Rajat, Mayank, Garima, Divya. Got it?
Yes, sir.
Huh? Divya?
Yes, yes.
So now you can take a screenshot. I think we are good.
Done, sir.
Done, everyone?
One second, sir. Let me take the screenshot.
Okay.
Yes, sir, it's good.
Okay. So let's do some practice questions. A text purchase. Oh, Shubham, I think. Okay. So, practice question. A taxpayer purchased a forklift for use in the taxpayer business for $20,000 on January 1 of the current year. The taxpayer sold that forklift for $22,000 on June 1 on the current year. What is the taxpayer section 1231 gain as a result of the sale? Taxpayer has purchased a forklift and on 1st January and sold on June. 20,000 was the purchase price and 22,000 was the sales price. So what is section 1231 gain or loss?
Option 1, it's been sold under 1 year, so there is no gain on.
Yes.
Right, because it is sold within 1 year, so section 1231 does not apply. Right, everyone?
Yes, sir. Yes, sir.
Mayank, Rajat, got it?
Yes, sir.
Second question, the sale of which of the following type of business property would be reported as section 1231? Which type of sale of property need to be reported in section 1231 property? Property used in trade or business and involuntary conversion. So first is inventory held for sale. Second is machinery held for 6 months. Third is cattle held for 6 months. Fourth is land held for 18 months. Which kind of property will be considered for section 1231?
More than 1 year.
So the option.
Right, more than 1 year. But inventory, do we need to consider inventory?
No, sir.
No.
Right?
So building, machinery, land items are
Only
considered.
real
Yes.
and depreciable.
Either real property or personal property, not inventory.